Welcome back to the course. In this lecture and module, we're starting a completely new module, which is gonna be about building your Wyckoff trading system plan. Okay, so we're gonna be applying theory to profitable action. Okay, so let's get started. So once again, welcome to module 7, the complete trading system. Okay, so far you have learned the theory. Now we will build the system, a complete actionable framework to trade Wyckoff methodology or so-called smart money concept profitably. Okay, because we all know that knowledge without a plan is pure gambling with extra steps. Okay, like nowadays you see a lot of like profitable traders online, doing live stream, all this stuff. uh, Most of them, they do share their story of using trade having a trade plan, to execute that plan uh, with discipline, right? But not all of them tells you the truth of what's going on. The most important thing, and like this is actually consistent throughout the trading career. Every profitable trader says like have one thing in common. They have uh, like completely defined trading system. Okay, a plan. All right, so let's do some quick refresh of what we have learned so far. We learned about Wyckoff market price cycle. This is how it looks like. you know you have you have an accumulation phase, then market you know starts to go up, and you can see some like reaccumulation happening as well, you know uh, on the markup phase, by the way. And then like markup phase continues, then distribution phase starts, this kicks in, and then markdown phase, where you will see a lot of redistribution occurring. Okay, so that's just like quick refresh, because your trading plan must account for all the market phases that we're gonna see. It's like, suppose your trade plan have like a trade setup in accumulation phase, as I'll show you guys. Like for instance, uh, by the way, I actually made like a lot of changes to the system. I mean, like, design wise. Okay, so here you can see, suppose your trading plan includes like just taking long trades, backing up action, you know, in that like accumulation phase. Okay, so it will only show you the trade setup uh, regards to that. Okay, and like I can disable that. Okay, and there we go. Right, we only have trade setup on the accumulation, like that. All right, so like your trading plan will consist of addressing different phases in the market. All right, um, so here's one quote that Richard Wyckoff said very famously. He said, three men came to the Wall Street. One always knew what was the best buy. All right, and another one knew why it was the best buy, but the third one knew neither of these things, and he only knew when to buy. Okay, and he made the most money out of all of them. All right, so this tells you that like why timing is the most important factor in taking trades. Okay, so timing is everything, guys, when you're entering trade. Okay, and the trading plan ensures we are ready to execute. Whatever market throws at us, we will execute our plan. That's what uh, the power of having a trading plan is. Okay, so there is 5 pillars of Wyckoff trading plan. Let's discuss them one by one. And as you can see, like, you have pillars. Where do we have pillars? You have pillars in, in a like really good foundational building. So suppose you're like, you're trying to build your account, you know, think of it as like building, right? As I show you guys the institutional operator building analogy, suppose you start here at 2026, okay? uh, then like you go there, okay, your equity curve goes there, then so this is end of 2026, then like you rest around here, you, right here 2027 end date, right? So all of this is because what's not shown here is the foundation, you know foundational pillar that like that's deep within uh there, that's why like all this is holding very nicely, because you have really good foundational pillar. Just imagine like, you have like pillars like that, okay, and the building stays above there, okay. So this is what that is exactly, okay. So what I what is this is, first of all, we need a market selection, you know plan, which is gonna tell us like what we want to trade, at particular time or something, okay. Then we need a time frame alignment, which is gonna tell us when to look for that trade, right? Then the third is your entry rules, which is gonna tell us when to enter uh, that trade, which is like very important. All right. And the another most important thing of all is your risk management plan. Okay. This is going to tell us how we can protect our profit and our capital. All right. And the fifth one is review and journaling. This is the best self improvement technique you can have in trading. Okay, this is going to tell you how you can improve your trading career over time, you know, and this, if all these five pillars combined, is going to give you a consistent, profitable trading system. Okay, so keep that in mind. All right. So let's discuss each of them, in more detail. So pillar one is your market selection, right? This is going to tell us choose markets that respect Wyckoff structures. Okay, we need a market with high liquidity, as I told you guys. Clear volume data and trending potential should be there. Then only we can trade. Our plans would say that then only we can trade that market. Okay, for instance, a couple of market type we can have is Bitcoin, Ethereum, and a couple of major crypto. Why is that? Because they have high liquidity, they have clear volume data, and they have trending potential. Definitely, right? So this is for Wyckoff suitability for this one is going to be excellent, and it's very highly recommended. Okay. Another is your indices like S&P 500, Q3, and other major indices. They all have the same characteristics of high liquidity, clear volume data, and trending potential. So those are also recommended. Okay. You can also trade on forex. It's good to have them, but like use with caution, because some broker they don't provide volume data. Okay. And I would, if you're a beginner, please don't invest your time on low cap altcoins or penny stocks. Just first learn the concepts, then you can apply them later on in your trading journey. Okay. So here are the market selection criteria then that we will be gonna putting in our trading plan. So first of all, as I told you guys, is a liquidity. Okay, this is your checklist. So you should look each steps in order to select the market that you want to trade, right? Liquidity, we need high daily volume, which ensures there's like no manipulation risk. Okay. Second is your volume data. We need a reliable exchange sourced volume. And then you have the market that we are trading, it should have a trend potential where we'll be seeing a history of clear trending moves. Okay. And fourth one is your like clear structures. I mean, like accumulation distribution patterns should be visible. Okay. And then when it comes to accessibility, those coin pairs or asset class, it should be available on your brokerage or exchange. Okay. All right. And pro tip for you is start with 2 3 maximum markets maximum, master them before expanding to other market. Okay. um, so pillar 2 is your time frame alignment. All right, let's discuss about them uh, you know step by step. So it's basically a multi time frame pyramid you have. Okay. For instance, you need like higher time frame confluence, meaning a daily time frame and weekly time frame chart will ensure a direction of the trend. Okay. The trading time frame, you have like 4 hour or 8 hour, it's going to give you the structure of the market, like good structure. And then lower time frame is going to be your entry timing, say like 1 hour 15 minutes, which we're going to be executing our trade. You know so like what we are doing is like we are doing a top down analysis here, right? So that like we have higher time frame alignment, then we have like trading time frame alignment, then we can execute the trade. Okay. So this is how we can visualize the multi-time frame alignment. As you can see, um, this is your long-term weekly, and I'll show you guys in the chart in a moment. Let me just show you in the chart. Hang on, let's just explain it here first. Okay, so long-term weekly, you know, if this is representing your, suppose like 10 weeks. Okay. All right, what we will see as the market is going up, we will see that the up wave on that weekly chart is just like going up. On that weekly chart, although we have like midterm daily time frame which is gonna go like this, up down, making higher high, higher lows. There's the trending market environment, right? And on those daily time frame, we're gonna be seeing 4 hour intra, you know like this chart, short term. That's your trading time frame, and then on that 4 hour itself, you will see 1 hour chart like that. And let me show you. So I'll just come here. Let me just disable this first. Okay. So as you come to this one, trading truth wave, um, you will see this. Okay. um, Enable multi-time frame 1 zigzag plot, enable multi-time frame 2 zigzag plot. So if this is your 15 minutes, so multi-time frame 1 is going to be 1 hour time frame. Okay. So check this out. If I come to 1 hour, you know we are seeing like, from this point, it's like upward starts, then comes down, then it goes up. Then on this particular 1 hour, okay, we can see like a lot of 15 minutes bounce like that. And let me show you what it, let me add that over here. So I'll just add this one, and you'll see how it looks like. See, this 1 hour it's going up. If like I've shown you guys, right? It looked like this, comes down, then it goes up, and on that particular up wave, you can see this like 15 minutes wave are going like that. Okay. So if I know that, like, my 1 hour is going up, then on those pullbacks are just a normal pullback, and then I can enter the trade on that particular direction. And that's why, like, you see this markup phase. Okay, it starts from there and goes like that. Okay, so all this like weak pullback, these are a good opportunity for trades. So let me add MTF2, and you'll see that what I mean. You see? So this is from 4 hour, and as you can see, 4 hour is just going up. So like you know, you see on this 4 hour we have 1 hour which is going like that, and then on that particular 1 hour we have 15 minutes time frame wave, or basically the time frame alignment. Okay, why we need that? Because all time frames aligned in an uptrend, this will give us highest probability trades. Okay, and you can see that here. All right, if I know that from this point onwards, 4 hour is going down, all right, it's in down wave, what I can do is like I can just, whenever the market pulls back this, and I'll explain what these colors means, but already know it's a wave volume. You see, it's like very high volume to the upside, but market couldn't, you know, uh, market just can't go up than that, right? So market just comes down. Okay, all right. That's why like, so that's your like more effort, less result, and we already know that 4 hour is coming down. All right, so we will be much more confident in taking that trade. And as I add uh, trading truth concept, it will even make more sense that like, okay, this price structure is this uptrend, and on this pullback I can take those trades. Okay, so this is that multi-time frame alignment visualization. All right, so there are a couple of rules for time frame alignment. Okay, first one is trade with the higher time frame. Okay, if daily is in accumulation, let's say bullish, only look for long trades on 4 hours. Okay, so if I come here on daily time frame, and by the way, in daily time frame this actually automatically adjusts, right? So in daily time frame, this is going to be, the smaller one is going to be your weekly uh, time frame, right? So if I come to weekly, you can see that hang on, let me disable those. You can see the weekly time frame, there was one downward, there is another downward that's going on. So as I come to daily time frame, right, this one when I apply is gonna show me the weekly one, isn't that? Okay, so see, weekly time frame is on down wave. Here it was in up wave, here it was in up wave. So like if I see an accumulation around here, you know, this couple of trades, I am more confident in taking this trade, okay, than around here, like when the market is trending down. Okay, so this is how we can actually figure out uh, from accumulation to reaccumulation, and like distribution to reaccumulation as well. Okay, so we will go in more detail, don't worry. All right, so rule number 2 is identify structures on the trading time frame. So we figure out what's going on 1 day time frame, daily time frame. Now we actually identify the structures on daily trading time frame, which is your 4 hour. All right, so your primary analysis happens here, phases, events, volume, all this stuff. We need to like figure it out what's going on in the market. Okay, and then rule number 3 is fine tune your entries on lower time frame. So zoom in for precise springs or last point of support entries after trading time frame confirms. All right, yeah, so we, don't worry, I'll show you guys what I mean by that. And I think I have shown you before, like as I come to daily time frame. Okay, I know that like hang on. So see, there's this accumulation distribution is going on. Okay, around here this was LPSY action, then it comes down. Now I know on like daily time frame there is like spring kind of formation. Okay, so from this up wave onwards, I knew that like these two candles here is going up, and like there is more chances to go up. It's like one daily time frame is already in up wave. Okay, now as I move on to 4 hour, As I move on to 4 hour, you can see the same candle here. 4 hour is also in up wave, right? And there was this like wave volume divergence there. All right. As I move on to lower time frame, even I know that like this accumulation structure is really good one. Like, so if I get this trade, I'm gonna take this trade, this trade or this trade, because I know where it's forming, on 4 hour, on daily time frame, it was forming near the spring. Okay, so it has higher probability of success, and it did work, right? You can see that. Okay, see, TP1 got reached, TP2 got reached here. On this reaccumulation, TP1 got reached on this top. All right, so keep that in mind. Now, a couple of common mistakes that you might make is trading a spring on 15 minutes time frame when daily is in clear distribution. So don't do that. Don't fight the trend. Okay. What I've shown you guys, practice those again and again, and like see the trades. Uh, take only high probability trades. All right. So let's discuss some like recognizing some trend states. Um, when you see higher high, higher lows, market is in uptrend, right? When you see lower high, lower lows, market is in downtrend. And then um, when the market isn't doing anything, it's just like going sideways, that's your trading range. Okay, this is our like Wyckoff accumulation distribution. All right, so let me show you how that it looks like. Okay, so this is a 1 hour time frame. Okay, here you can see it's like it's making an accumulation selling climax, automatic rally there, and then it pulls back and it makes a test of spring. Okay, or like just secondary test, and market goes up. All right, giving me sign of strength, pulls back like that. So right off the bat, you see it's like making higher high, higher lows, higher high, higher lows, higher high, higher lows. And how we can figure it out? Well, you can see that clearly here, right? Like from this point onwards, we are starting tracking the lowest point, okay, and the highest point, and the midpoint of that. You see this purple, hang on, my earphone got dropped. All right, so we know as the midpoint is uptrending, right, that means market is start making higher high and higher lows, right, like that. And you can see that happening there. And this is very important. Like we're gonna come to like why uh you know we need this. For instance, you can see as this was going up, it start making higher high, higher lows. Market was uptrending, then it like goes sideways. It stays flat for a lot of time. You see, right? And then it starts going down. Then it makes lower high, lower lows, right? And you can see that this is how we are recognizing the trend states just with these reference lines. Okay, which is going to make our job a lot easier. All right, why we are discussing this is because your plan must specify as well like which trend states uh, you'll trade. Okay, so if it's in uptrend, we're going to take long trade only. Okay, if it's in downtrend, we're going to take short trade. And if it's in like trading range, we can just like stop trading or get out of the market, and wait for the next um, high probability trade, right? So let's continue. Here's another quote from Richard Wyckoff. And he says, and I quote, the stock market is like a moving picture, okay, on which every flash is different. By observing every detail, one may study the action of the characters and read their purposes and judge what they are likely to do when put to the test. I mean, think of it, guys, like how profound this statement is. Okay, and I'm gonna read it again. Okay, think of stock market as like moving picture. Okay, which on which every flash is different. Okay, as you're like taking picture like that, you know, like the frames or flash is like different because that's talking about like every candle or every moment of that. Okay, and by observing every detail, one may study the action of the characters. Okay, so as we practice, as we do replay practice, you will see chart moving. Okay, let me do that just for like example. Select random bar and I'll just play forward in time. You see, like every frame is adding data and like showing us like what its intent, and just by like knowing how it's like reacting right now, we can reduce like how it's going to react in the future. Okay, as you can see, like this was a backing up action trade, and like we have seen like market is making higher high, higher lows because midpoint is uptrending, right? So when it comes to midpoint and big backing up action, market tries to go up, right? And this is how we are actually studying the action of the characters. Okay, and we're reading their purposes and judge what they're likely to do when put to the test. Okay, so whenever the market is coming to each line that you see, okay, either it's blue line or red line, you know uh, it's reacting to it. Okay, and like we are uh, studying how it's reacting so that in the future we can actually uh, you know like take profit from this, that like how the market is behaved earlier, and now I have evidence that like once I do that, it's gonna go up or down depending on where the market is in that particular movie. Like if you imagine, like when we watch movie, we can like fast forward it, right? We can actually like uh, and like after watching a lot of movies or TV shows, something like that, one moment happens where like you can actually tell what the character is going to say or do, and like that image prints in your brain and like says, okay, like this is going to happen like that. So that's exactly what we are learning in trading as well. um, so every time frame tells part of the story, we must read them all right. So let's discuss about pillar 3 entry rules, which is very important. And this is just a preview for now. All right. We're going to be discussing more on this in lecture 7.2. All right. So we'll be defining two entry approaches. First is going to be your conservative approach, where we're going to be entering trade on last point of support or backing up action after sign of strength confirmation. So for instance, you see this one, sign of strength, uh, right? I don't know if you guys can see that there's like SOS there. Okay, I might make it bigger later on, but like let's just stick with it. Okay, SOS, then it pulls back, backing up action, right? Here you would take trade. You see like how much profit it gives, like around that much, 2.6% there. You would have your stop loss there. So it's like 1:2 trade. Then the market comes down from this resistance there. Okay, uh, and then it makes an LPS. You see this LPS after sign of strength confirmation. So you would also take this trade, and you see like it gives us like really good risk to reward ratio. And then like another backing up action like that. Okay, so that's your conservative entry. Another entry approach is your aggressive, which is spring trade with volume confirmation. Okay, so if I find a spring trade, let me see if I can find it. It's like backing up action trade there. There, you see, this is your spring, and like we're gonna be dissecting like how we can uh, take this trade or not, like that. If I can find another spring. Anyway, how about like on 15 minutes? Backing up action again. Mm, yeah. Oh, there we go. Here's the spring, you see, right? So like that's gonna be your aggressive entry, and we need a volume confirmation to enter the trade. All right. So key insight for like pillar three is your trading plan should specify which approach you'll use, and most important of all is when you're gonna use that approach. Okay. So we're gonna be going in much more detail later on. All right. So this is like where we'll apply like which approach and you'll use and like when, you know. So let's discuss that in like trading ranges where we're going to be applying this pillar 3 in context, you know, like. So here we go. All right, so if my lps, you know, and like all this stuff is happening on an accumulation range, that's like it's like very high probability trade, and like, you know, the context apply there is after sign of strength I'm gonna take that trade, you know. So where accumulation range form, I've told you guys, you know, downtrend range then markup phase, so we need to look for long trades. You see downtrend there, right? Let me clean it up a little bit. No, um, I'm gonna get rid of these parallel lines. Okay, and then yeah, that's it. Okay, so you see after this downtrend, market was going sideways, then markup phase starts. So like here, you look for long trades. Okay, same goes for distribution range. After uptrend, range forms, markdown, look for shorts. And when the market is going like sideways, like it's unknown context, you know. So no clear prior trend context. So wait for clarity. All right. So this is your accumulation schematic reference that I showed you guys here. Okay, this is like ideal condition, if you will, like you have preliminary support, selling climax, automatic rally. This is your phase A, you know. Then phase B, phase C, spring happens, aggressive approach is going to be there. Phase D, you're backing up action, and then like LPS, you know, and then sign of strength. uh, so this is going to be a phase D, and phase E transitioning into phase E. Okay. All right, so let's continue. One point you should remember is entry points depend on your risk tolerance and trading style. Okay, so let's discuss about pillar number 4. You see the risk tolerance. All right, that's where the risk management comes in. All right. Um, so this is where we're going to be discussing about stop loss, all right, in much more detail. Like I'm going to be teaching you guys how we can place phase based stop loss, you know, how we can place targets as well, cause and effect projections, and position size, risk based calculation, all this stuff. These are coming in 7.3, 7.4, and 7.5. Okay, so get ready for it, guys. This is going to be the you know, most important lecture series in you know, in this like trading module. All right, so remember that risk management is not optional. Okay, it's the difference between trading and gambling. I'll repeat that again. Okay? Risk management is not optional at all, it is mandatory. Okay, because it is the difference between trading and gambling, and we want to be a profitable trader. That's why we need a profound risk management technique. Okay, so how we can apply that, you know, in the market, I'll will go much more detail. we can like look at it from the trend strength perspective, trend strength or weakness. Okay, if the trend strength is good, then I might like take a good risk. If it's weekend, I might not want to risk putting trade. So this is how it looks like, right? So as we have like strong trend, we can stay in trend, strong momentum, steep angle, price moving swiftly, trend is intact, so I can take risk around here. So see, like it's the same example here, as the market is going, like I can take the trade, put my stop loss here or below that one, you know and target for TP1, TP2, TP3, and it reached TP1, TP2, right? TP3 is still intact, and like it might reach it there. Okay. um, if it's in weakening trend, the trade, tighten stop like that, you know uh, like if it's in a weakening trend, then we will actually tight our stop loss. We won't be risking that much, all right, because it shows that slowing it shows a slowing momentum, and potential reversal might happen, and you can see after this market just like snap back there. Okay, so this is like, if you see price flattening, just prepare for exit. All right, so let's discuss about pillar 5. And like this is going to be about reviewing and journaling. So your trade journal framework should look like this, where we have like pre-trade, what phase the market was in, what's the trigger, what's the plan, and like we're going to be going much more detail in later on. Entry, exact price, time, stop, target, position size, all this stuff. Okay, and like we will do some like trade management. Did you scale that trade or scale out? Did we move the stops in the trade's direction, and why did we do that? you know uh, Exit, where did we exit? Where did you exit the trade? Did it reach full target or early on, like that? So as we are moving forward with trading and like applying this principle, we need to have a data where like we need to log our trades, saying that like what sort of principles that we applied, what we should have done, what we didn't do, so that like we can progress step by step. Okay, and then finally review, what worked, what didn't work, grade the trade from A, B, and C. Okay, so if your trade worked really good, grade it A plus or A trade. If it's like hit your like break even, just grade it as like B trade. If it hits your SL, um, you know 3 out of 10, and out of those 10 trades, 7 turn to profit, like those 3 trades is going to be like your C grade trade, where it hit your stop loss, like that. So as you can see, like as we have more data on it, like we can improve it much better. And like one thing you should understand, guys, is that like whatever money we are putting in the market, it's real money. Okay, like whenever you're trading, it's like it's hard earned money. People actually uh, sorry, like work hours and hours to earn that sort of money. All right, so the profit we make, it's our money. It's like it's the is the payment for hard work that we did. So like we should be aware of risk management and trade management, and most importantly, how we are managing our money, and we can ensure that with a good reviewing and journaling. All right, so here's one like very interesting fact. Traders who journal, they improve 3x faster than those who don't. Okay, just think of just think about it. Okay, all those professional traders, all those profitable traders, if you like ask them like show me your trades, they will like show you like, see, I have like taken, this was the reason, like this is why I did it. Or if they don't have it, then like it's like nowadays we are having like live streaming, right? They just trade. If you want to look at their log, just look at the video. It's like you can see the thought process, like what they did right, what they did wrong, all you can apply it. And this is that principle where, like, if you're journaling, it's guaranteed that you're gonna improve 3x faster than those who don't. Okay, so this is how your daily routine should look like. Okay, in the morning you do some like higher time frame scan, like check daily structures. It's gonna take you 5 to 10 minutes, for 2 3 different um, like asset. And like with this indicator, you can just do it in like 30 seconds and less than 1 minute, to be honest. Okay, analyze trading time frame, review it. Okay, like mark phases, set alerts, all this stuff. All right, so after doing a morning scan with higher time frame, we can analyze it on the lower time frame, I mean, like the trading time frame, review it. um, and then we can move on to the execute trade session, which is going to be your lower time frame entries, where we'll manage trades in active hours. All right, this like your London session or New York session. Okay, then we will journal that, like log that trade. All right, note lessons. And then weekly deep review is just like stats and adjust plans as needed. Okay, so this step by step with we have 5 pillars, we have 5 daily routines, and we have 5 fingers as well. So like this is the principle that we're gonna be applying, you know in real time. All right, uh, morning morning scan, analyze, execute, journal, and then we will do some like weekly deep review of all the trades that we do. All right, so this is a must have a daily routine. If you're a beginner, like, you should execute that. All right, and most important of all is like I think I'm saying this a lot, but guys, don't take this indicator for granted. Okay, like use it just to replay trading and practice. Okay, and like you will see those patterns again and again happening, just with this trade. Imagine how much profit you would have made with like higher time frame context. Like this wouldn't have like good trade because market was coming down. You can see that on daily time frame, like see, that was around there, market was coming down like this, right? Now when this candle happened, this one, you know that was your like in hourly time frame we made these structures. Okay, so after this, all this stuff, these were like your good trade. And I'll just like do this from here. You'll see there. Okay, let's come to 15 minutes time frame. You see, so like long trade, profit got hit, long trade, profit got hit. All right, so having a daily routine will ensure you a profitable success, that I can guarantee it. So this is going to be your trading plan template. All right, as I told you guys, we need markets, Bitcoin, Ethereum, SPY. Make sure that's like high liquid, all this stuff. Higher time frame, trading time frame, lower time frame with daily, 4 hour, 1 hour, and 15 minutes. Right, then you need your entry style. Is it a conservative LPS after sign of strength, or like just spring? Risk per trade is going to be 1% of account. Then stop loss rule below spring or LPS. Target rule is minimum 2:1. Okay, and like we're gonna be going in much more detail. Okay, I just wanted to show you guys a template of what your trading template would look like, trading plan template. All right, so action item for you is like complete your own trading plan template before proceeding to lecture 7.2. Okay, you can add, like for instance, if you want to trade Q3, just add it here. Okay, if you want to like this, you can say like you can add 15 minutes here. Okay, if you want to trade on 15 minutes time frame like that. Okay, and then like entry style, just specify which entry you want to take. Suppose you're only testing with LPS, right? LPS after sign of strength. Okay, risk per trade 1%. We're going to be discussing in much more detail later on. Just keep it 1% right now. Stop rule below is LPS. Okay, target rule minimum 2:1. So this is going to be your TP2 if you're taking trade. All right, so build your own trading template. All right, let's move on to the uh, next lecture after this. So key takeaways from this lecture is select your markets wisely, focus on liquid markets with clear Wyckoff structures. Okay, then align your time frames, higher time frame for direction, trading time frame for structure, and lower time frame for entry. Okay, uh, journal everything, guys. Review is how you improve in your trading journey, and build your routine because consistency beats intensity. All right, so quick reference here is you have PS, preliminary support, first sign of buying interest, selling climax. All right, you already know this one. Automatic rally, spring, sign of strength, last point of support, jump across the creek. You know, this breaks resistance decisively. I'll show you guys what it means. You know, then back up to the edge of the creek, all this stuff. All right, so you can read this, and like most important of all is like this, what it means. Like for instance, selling climax means like panic selling with high volume. Spring means shakeout, you know, false breakdown, trap sellers. Sign of strength means strong rally on high volume, you know. And last point of support is your like final pullback before markup. Okay, and this is like your retest of breakout level. So this here you see back up to the edge of the creek here, BU. That's your like retest of the breakout level. All right. So next up, we're gonna be uh, learning about entry rules, conservative versus aggressive, and when to use each approach and the complete entry checklist. All right. So I hope you guys like this lecture, and welcome to module 7. You know, please practice, do some replay uh, practice, and then, you know, move on to the next module. I hope you enjoy this lecture, and I'll see you guys in the next one. So thank you. Bye.